Did you know that the official birthday of the internet is 1st January 1983? That day, everyone got a common communication protocol called TCP/IP. This enabled all the intranets to be networked to each other, giving us what we call the internet. Did you know that in 2016, when the UPI was launched, transactions were in thousands? Today, transactions average 13.4 billion a month. Hello and welcome to another edition of Capital Calculus. I am your host, Anil Padmanabhan. A few weeks ago, Nandan Nilekani co-authored a piece for the Bank for International Settlements based out of Geneva. BIS is the think tank for central banks world over. In this paper, Nandan is proposing the idea of a financial internet, or what he calls Finternet. Essentially, Nandan is arguing that existing financial networks in the world operate in silos defined around the sovereign borders of each country. So these systems don't talk to each other, and if they do, it is a very elaborate and delayed process. Instead, Nandan is suggesting that they be linked through a common protocol, something similar to the internet. The best example of the use of internet is, of course, our email. You may use Hotmail, I may use Gmail, somebody else may use Outlook. Yet all of us can talk to each other because the internet links each and every mail server through a common protocol. Now he wants to bring this to the financial world. The whole idea is, once you link up the financial networks, you will speed up the process, you will deepen the financial network, basically put them on turbo mode. I know it's a very geeky concept, but please, I request your patience till the end of this show. And to guide us, I spoke to Rahul Matthan. Rahul is a previous guest on this show, a partner at Trilegal, and somebody who's been closely associated with the idea of Finternet right from the beginning. I began by asking Rahul to unpack the idea of financial internet or Finternet.
If you ask me this kind of an open-ended question, I don't know which side to start from. But I think what the paper fundamentally talks about is that we today have a number of ecosystems that make up the financial ecosystem. And if you just think about it, we've got, of course, the banking system, but then you've also got the securities system. You've got, within the banking system, you've got many other sort of subsidiary systems. And today, they all operate within their own, in a sense, siloed ecosystem. They have their own special intermediaries, and they have their own special rules. Sometimes there are permissions which guide who can enter the ecosystem and who cannot. And so in that sense, they're all quite fragmented. Of course, we have central regulators that sort of centralize some of this, but they do that through the force of regulation. And sometimes, they respond to various different sorts of incentives as they regulate the ecosystem. So the idea behind the Finternet is, is it possible now, using modern technology, for us to find some way by which we can connect all these separate ecosystems? Use some of the ideas that powered the modern internet, and then more recently some of the ideas that powered India's digital public infrastructure, to connect these different financial ecosystems. Because if we can do that, it's apparent that we will lower all sorts of barriers. We will make things more efficient. We will remove some of the more complex workflows that we have today, just because in each of these different ecosystems, we've got different intermediaries, and then to have the intermediaries interact with each other makes things more complicated. And then, of course, in many instances, we have to take some of the transactions offline in order to connect the two ecosystems. That also is an inefficiency. So the idea was, a lot of these ecosystems evolved because they started out in traditionally non-digital contexts. So the banking system started out in the Medicis. So there was no concept of digital ecosystems. But some of those practices have persisted even today, despite the fact that we've got modern technologies. So, is there a fundamental reimagining that we need to do in order to really get all the benefits of digitization? And I think that is really what the Finternet proposes to do.
So, Ron, quick follow up. How does this differ from, say, creating a DPI framework, digital public infrastructure framework, for all countries in the world and then connecting them? Isn't this the same thing or this is something different?
No, it's once again the principles are similar, but I think the important thing and the important difference that the Finternet describes is in the way it thinks about. First of all, it applies. This applies only to the financial ecosystem, though it is possible to do this for all sorts of other ecosystems. So, and DPI extends beyond finance to a whole range of other things. But keeping that aside, I think um, the important thing that this paper does and talks about is that traditionally we have managed our ecosystems in such a way that we have kept the registers, the list of assets, separate from the rules that determine the transactions on them. And that seems like a very sort of esoteric kind of a statement, but let me break it out, right? So if you've got land title registries, right? So you've got the Transfer Property Act in India that describes how land can be transferred from one to the other, and then you have a register that the sub-registrars in the various districts maintain, which is the total list of all the titles and who currently owns them, along with a history of who has owned them before. Right now, we depend on the registrar to determine whether a transfer is validly done or not, because the registrar is interpreting the Transfer Property Act and all the various applicable laws, Registration Act, Stamp Duty Act, all the various laws that come into the transfer of property. And once he or she determines that the transfer is valid under all of these laws, will register the new owner in the registry. And the idea is there's no need for us to have these two separate places. It is possible, if we can think imaginatively, to embed the rules that govern a particular type of financial asset directly into a token that represents that asset. And I think that is the powerful difference that this paper seeks to explain. And I think it's, you can see this very easily in a lot of the, it's harder to see this in the context of tangible physical assets, but it's very easy to see in the context of say dematerialized assets. Today all of our securities are largely dematerialized, and so transactions and securities take place in a dematerialized way. But what the paper asks us to think about and to try and do is to embed into that dematerialized share certificate the rules that govern what can and cannot be done with it. And I think that currently we don't do. And I don't think DPI does. I don't think anything that we've thought about currently does something like that. The closest that we come to something like this is in the crypto space, what the Ethereum smart contract seeks to do. And so, in many ways, I think there is inspiration coming from there to this. So, in response to your question, I think it's closer in this sort of conceptualization to the work that's been done in version 2 of the blockchain, which is not the Bitcoin version, but the Ethereum and everything that's come after that. And I think that really is where the parallels are.
Clearly, financial internet of Finternet uses the same protocols as the internet. The internet is nothing but the movement of information packages across an information highway. Similarly, in the case of Finternet, there will be little financial packets which will be moving around on the information highway, but they will have embedded rules and of exchange, as it were. The idea is to improve the efficiency of these financial networks by integrating each other. But the big question is, these information highways have to be public in nature. So I was curious to know who will build these digital public highways, as it were.
So I think that the onus is on the regulators to enable this, because in a sense the regulators have to replace the existing frameworks, the existing regulatory legal frameworks with this. And when I say replace, I'm using a harsh um, end state kind of a framing. It's obviously going to be gradual, but we're going to need to validate the fact that a transaction concluded on the Finternet has as much evidentiary legal finality as a transaction that is concluded on the traditional mechanisms. So, in order to do that, the only place I think that we can place that responsibility is on the regulator and perhaps the government in a broader sense. So, we may need some laws changed. We may need regulators to change regulations, substitute delegated legislation to try and enable this. So, I think the idea is that quite different from the way the blockchain works. The idea here is to really ensure that the regulators do this transition away from the intermediated, siloed approach towards a more integrated, approach where the asset is embedded with the regulations that govern it. So to answer your question, individual regulators would do it, but since the Finternet actually envisages a wide range of transactions that could eventually get onto it, including commerce of all sorts, it would require more than just the central bank to be implementing this, as it were. It would require all of government to do it, because once you tokenize assets, you can tokenize any sort of asset, and then all the regulators of all sorts of assets would need to step in and say, look, I am now changing my laws such that these assets that I regulate can also find a play on the Finternet.
So, given the geopolitics in the world, I don't see this being adopted universally. It'll probably, even if it's adopted, it'll be among like-minded countries, right? And so, which means separate parts of the world will deal with different financial networks, as it were.
Yeah, I think this is an option. So, as with all sorts of other systems, we offer an option. Those who adopt it, become the exemplars, the first exemplars of these options. And we watch the way this works. We watch to see how what the reactions are by people, etc. And then other countries will say, "Hey, look, this is an interesting thing. Let's also jump onto this bandwagon." And slowly, it will spread. I can't see any other way in which this will happen. So yes, I think the answer to your question is yes. We are going to have little islands of countries that accept this, and it all depends on whether this is successful, or if there are some unintended consequences that at the writing of this paper we don't fully see, but as we implement it we find that there are some other unintended consequences. If that happens, then the whole idea fails. If it doesn't happen, then countries that demonstrate greater efficiencies by using this model will become exemplars for other countries who say, okay, this looks like a good sort of an idea, let's try it. And it has the added benefit that there are 5 other countries that are using it. So if we adopt it, then our efficiencies between our countries could also improve.
So, finally, Rahul, do you envisage a timeline for the rollout of the Finternet?
No, I mean, look, this is really, really early days. And there are so many steps. I think the paper itself is a very, very high level paper. There are many details that we need to get into. How exactly is this tokenization going to happen? How are the rules going to be embedded? I think, for instance, there are simple transactions that are very easy to do. But the more complex transactions would be actually quite hard to embed the rules into that. Transactions where you not only have financial regulations, but say competition regulations, consumer protection regulations, all of those interplaying in a particular type of transaction would be much harder to embed the rules. It would not be up to a single regulator to embed those rules. And if there's a transaction where we want to embed the rules into the token, and a regulator says, look, I'm going to embed my rules into this token, that transaction would struggle because it would, on the one hand, be concluded digitally on the Finternet, but some other regulator, say a competition regulator, could wake up and say, this transaction needs to be nullified under my law. And then you will erode confidence in that whole ecosystem, because the whole premise was I was going to engage in the Finternet because all the rules were self-contained on this tokenized asset, and I don't have to worry about some regulator coming and hauling me up. And I think that is a serious concern as we roll out the Finternet. So my prediction or my estimation would be that we would take simple transactions that are almost entirely controlled by a single regulator. Let's say a securities transaction, just the purchase and sale of securities on the stock exchange, or something similar to that, where it is actually quite self-contained, and then use those transactions as the exemplars. How long this whole thing is going to take, it really depends. I mean, I've stopped betting on technology because there are so many other factors, exogenous shocks that give rise to the growth of a particular new technology. But it's an interesting idea, and it's a very bold reimagining of the way things currently work. And I'm very hopeful that if the stars align and if all the circumstances are okay, we will see, at least in some specific instances, the success of this new idea.
Rahul is right. This is a bold new idea to reinvent the rules of global commerce. But be sure, they are not suggesting that you demolish the existing financial networks and build a new one in its place. No, they are arguing that you keep the old regulations, the old networks in place, but interconnect them through a network which will make it super efficient and, most importantly, interoperable. The obvious question is, so what if they become interoperable? There are many uses. Among them, it lowers transaction costs, speeds up use, thereby creates more efficiencies in the system, expands and deepens the market for, say, wealth creation, cross-border payments, or create access to credit. A range of such uses. The best part is India's recent record in financial innovation, especially with respect to digital public goods like Aadhaar, UPI, and so on, leaves it in a perfect position to take advantage of the Finternet as and when the party begins. Thank you for watching. Don't forget to subscribe to StratNews Global on YouTube. Hit the bell icon so that you don't miss any updates. And please to share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.